Well, here we go again. The third time in about 7 months, we're near market highs and the market starts selling off, this time worried about geopolitical tensions and then also the Fed meeting that concludes tomorrow, not knowing if we're going to get a hawkish Fed or a dovish Fed. I'll give more insights and ideas as we look at the charts in this video for where we could potentially go from here. And if you guys want more of my analyses and my buys and sells, talk to me and the other thousands of community members together over at the Discord. The link is down in the description. Code word doctor is going to get 50% off your first month when you sign up for the earner tier. Go ahead and check out the perks that are over there for those earner tier members. I'm telling you what is an ecosystem that is seemingly endless with opportunity. I'll tell you more about that later. In the meantime, let's look and see where we find ourselves at. So going back in time, all the way back to Friday when I said I'm not ready to be overly bearish about this because we're still above the 13 period EMA. Here you can see it's the Qs and it's the 1 day chart, the daily chart that we're looking at here. We caught support at the 13, had a nice green day yesterday for Monday, and then between geopolitics and the Fed coming up, the market's like, nah, this is just too much uncertainty for me, and it sells down today, closing down about 1%. That's not a reason to say that it's all over and we're all done from here. Now, mind you, losing the 13, trading down below that is where we start to maybe find that short hedging may be appropriate. I don't think that it totally changes the sentiment. I think that we're still in very good shape as in terms of will we see new all-time highs. I do think that Jerome Powell is going to have a lot to do with that. I talked about it in my morning video. Check it out. Click on the channel title, go to videos, look for Jerome Powell's face on the thumbnail. You'll see it, and it really does. We have a huge thing coming up tomorrow with the summary of economic projections. Like I said, I talked about in my morning video. You should go back and check that out. So if we do sell down below that 13 day, we want to watch for the 5 to cross the 13. Now, some evidence that we see for being bullish is right now that the RSI is still up above 50, but you can also see that over time we actually have, between the rising prices over these past several weeks and the lowering of the RSI, which we just put in a new lower peak here, coming in at 59.47 versus a 60.16. So just a little bit lower. This could be that signal that momentum starting to subside a little bit more, and this could be where we start to dip off and drift off a little bit more. We do have this gap over here to fill that goes all the way down to about 492, so we want to watch for that. Now, mind you, I don't necessarily think that we're going to sell that way, but if we do start selling off, then we got to start talking about where we could find ourselves based on that sell-off. Until we lose the 13 day though, not a lot of reason in talking about it. Now, mind you, I've been working on my day trade setups, and I'm going to share those day trade setups over at the Discord. For the Qs is usually where I do my day trading with the 0 DTEs. I went live with stock mode today. I'm probably going to do it for at least a little bit of time tomorrow around 1:30, 1:45, I'm guessing. The link in the description for the Discord is going to get you access to that. Like I said, sign up for that earner tier. And trust me, you're not going to be sorry. Less than $1 a day. You're probably going to end up staying just because you're going to find so much opportunity there waiting for you. So let's pop this back up here. So again, yellow 13. That's exactly where my eyeballs are looking right now. If I put up the simple moving averages, we are still up above the 20-day. That's a bullish thing to see. So we got bullish RSI. We're up above the 20. We're still in very good shape right now. We got to watch the geopolitical news as that unfolds with more Israel-Iran stuff. We got to watch what other countries surrounding do, if anybody else is getting involved in it. That further escalation could be downward pressure for the markets while the more questions build as we have that uncertainty. But as things start to happen, if anything starts to happen, we get further action from it, the market could return to based on what that action is. We'll leave it right there for right now. We do have that golden cross potentially coming for us sometime soon, which is a bullish signal to get that 50 back up above the 200. Very similar technicals when we look at SPY, IWM, that inverse head and shoulders that I've been watching for here. If we dip too hard on this, we can absolutely refute the inverse head and shoulders. It breaks, should we break this peak on this right-hand shoulder that's over here. We do not want to go down lower than that. It also isn't very great if we break back down through the neckline and find ourselves messing around over here. But if we do continue to get higher lows on that, that can still be a very good sign. So just some eventualities, some things to watch out for. We are still in support, even though if I take the technicals down, you can see that we actually lost the 13 now twice, and we're getting these high wicks after that indecision. So we got indecision, then we got a lower candle. That can signal that we're going to go lower. The RSI still is above 50, but it is currently falling. We're up above the 50 EMA, but we did not overtake that 200-day. Let me put that up there for you so that you can see it on your chart here. There we go. So on the chart in front of you, once again, IWM is the ticker that we're looking at. 1 day, tracking the Russell 2000 stocks. We still have the 20-day, but not by much. We went up and tested the 200-day, got a big fat rejection. We reverted to the mean. A bounce here would be incredible, and I think it is in the hands of the Fed to make that happen for us. So we want to see what Jerome Powell has to say for that. I think that there's a ton of stuff going on right now with risk assets that want that question of easy monetary policy. Do they see continued economic strength? Do they see further labor market weakness? Are they expecting higher inflation between the tariffs and also energy prices going up with the conflict between Israel and Iran? Is this going to be something that's going to be long and ongoing, or is it going to be short and over with? These are questions that hopefully we get some sort of color commentary, at least on some of it, from Jerome Powell, that there's not a lot of no information going out. His tone is going to be checked. The words that he says is going to be scrutinized. It's going to be a big deal. Going to be wildly volatile tomorrow, especially as we start to get near that 2 o'clock to 2:30 hour, even up to 3 o'clock. We'll say 1:30 to 3 is your prime window for dealing with the Fed. And then we take a look after the market closes to see, okay, well, how are we planning from here? What's our trajectory? Are we heading to all-time highs? Or are we heading back down to maybe test a 200-day or something like that? That's the sort of planning that I'm talking about. So, guys, let me put this back up here. We'll take a look at Bitcoin. Bitcoin ping-ponging around, sort of doing this weird consolidation pattern with a slightly bullish bias to it, that we're still up above the 50 EMA. We did lose the 13 and the 5 so far, and the RSI is down below 50s. That's a near-term bearish sign. If we go out to the weekly chart, you can see a few things here. Number one, when I look at this, what I see are these high wicks that we're getting off of this. This can be signs of selling pressure, which we also had back here previously. So if we fall down below this 100,000 trend line, we could see a much further decline from there. So we are up above 50 for the RSI on the weekly chart, and we go into the monthly chart, we're still sort of subsiding price-wise, and we do have just a little bit, I think the weekly chart actually shows it best, a little bit of bearish divergence between the price rise that we've had over the past several months and the sort of peaks that we've seen. So prices up, momentum down. It is possible that we actually see, now mind you, I don't know if we get this or not, but it is possible that we actually see that next big dip opportunity coming into the crypto space before we make that run. There's been a lot of analysts out there calling for that dip. I've been hoping for it. Matter of fact, I've been watching for signs of it. Maybe now is that time, or very near to now is that time that we see that next big dip before that next massive run, especially if the dip comes with some hardship and then it's followed with easy monetary policy. Then crypto could go to the moon for the first time in a little while. It's been kind of painful eking out those gains over the past several weeks to months. So let's keep our fingers crossed for right now. Keep on watching those technicals. Keep on coming back here and seeing what I have to say. Now, mind you, if you want to see the other panel experts, such as Crypto Will, who exclusively covers crypto, we are all waiting for you over at the Discord to help you through your journey towards financial freedom, towards building alpha in your portfolio. The bread bot is over there, which can tell you when the big moves are coming up or down to your favorite plays, advanced charting tools, AI tools, the community of thousands of members as well. It is an absolute ecosystem there that's there to help you and support you in that journey. So guys, once again, links in the description. Don't forget that code word doctor. And when you see the link for Stockmo Academy, Stockmo being a personal friend of mine, we've been in education together like brothers for the past 17 years. With him having his background in finance, then jumping to education, me being in education, then developing a passion for finance. So we kind of came at it from opposite directions. It's like a match made in heaven. He put some courses together. He shared a link with me that I can share with you guys. It helps to support the channel, and it also gives you access to the technical analysis trading course, the bread recipe trading strategy, and also the options course. Code word doctor will give you a discount whenever you sign up for those courses. And if you bundle the two courses together when you sign up using the code word doctor, that's where you're going to get that ultimate savings. And I'll tell you what, it can pay back in dividends with what you put into it if you really study and adhere to what those lessons have to say. And they're small, easy to digest pieces, and they're made for the common person, but yet super powerful that even the most experienced of traders can still learn stuff from them. Code word doctor, links in the description. Guys, let's wrap up with a little bit of talk about TLT, TMF, and also some gold prices. So what we see for the markets, we see some evidence of some de-risking. And if we go to TLT, which should move opposite of that de-risking, this should be more of a flight to safety. But with the US debt considerations, it's been a little bit muted, but we do have some bullish signs here. So the RSI peaking up above 50, perfect. We're up above the 5 and the 13. Tested the 50 EMA. If we get on top of that, that is a very bullish sign for that. And TLT is the 20-year Treasury ETF. If we go to TMF, that, my friends, is going to be where you get that triple leverage version of it, and that should help us push up those prices. If we move more to safety, that could be the play to be watching, and TMF should benefit in outsized ways for it. We'll keep our fingers crossed to see what we get there. If instead we go back into a risk-on environment, well, then TMF, TLT, they're probably going to suffer in the near term unless we find some major way to have a better handle on the debt crisis. But I will say, just in the near term, I do think that there could be some opportunity there, a trading opportunity coming up for TLT and TMF. Now, last, gold prices here. Gold price is almost like a triple top. We've actually never really closed. Let me see what the highest close was here. I think this was the highest close that we got. That close on this was 34.33.88. So we'll call it 34.34 because I like repetitive numbers. Plus the song number 34 by the Smashing Pumpkins. I'm sorry, not number 34. They sing 33. 34 is Dave Matthews Band. Very nice instrumental sound. In any case, we had this nice high wick that really popped up there, but massive selling pressure. So selling pressure every time we've gotten close. Right now, more selling pressure with this doji candle that's deciding, okay, well, what exactly should I do? Are we going to go risk off, which I can skyrocket and I retest all-time highs? Or are we going to go risk on and I got to soften again a little bit, head back to support? So that's what I'm watching for gold prices, what I'm watching for bond prices, what I'm watching for Bitcoin, what I'm watching in the markets to really get a feeling for, okay, what kind of risk environment do we find ourselves in right now? And right now, it's a cautionary one. So that doesn't mean go mega bullish. It doesn't mean go mega bearish. It means, hey, we're setting up for some eventualities that could come our way. We're sort of at a teetering point, if you will, where we have just a culminating bunch of catalysts coming together. The Trump tariffs, geopolitical risk through Israel and Iran, the Fed meeting coming out for us. Then following that, as we get into July, don't forget that we also have the labor market numbers. But honestly, a lot of that kind of stuff, the inflation numbers, labor market numbers, they go on the back burner until after we get the summary of economic projections and what Powell has to say when he comes out and speaks at 2:30 tomorrow in the market. Guys, let me know down in the comments what you think of this video. Let me know if there's other commentary that I should be adding in, other things that I should be looking for in terms of your favorite plays that are out there. I'd love you to share your favorite plays with me, and then I can provide coverage on those as well. And then also down in the description, don't forget about those links. Come join us at the Discord. Come join the party. We'd absolutely love to have you over there. Join the 1,000 members who already have signed up. It is the place to be. I love that I'm part of it. I love the community that's over there, and I hope that I see you over there too. And then also don't forget about that coursework if you don't learn about trading options and building alpha in your portfolio, and also journeying towards financial freedom and letting us support you in that process. The course is through Stockmo Academy. Code word doctor is going to give you a discount with either link that you use. Matter of fact, just use both links. Guys, thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.